All right, guys, we have to talk about the non-farm payrolls and unemployment rate disaster and what it could mean for the markets. I am Dr. Stock, Doctor of Education, and this is important, so let's just get right into it. So today, 8:30, it's 8:37 as I record this right now. Non-farm payrolls coming in at 114, previously 179, and we expected 175. Not great for us. That means that would be significant loosening in labor market conditions. And then on top of that, we have unemployment rate of 4.3%. When before it was 4.1, we skipped right over 4.2. 4.2 would have been terrible. 4.3 is a disaster. Triggers the SAHM rule, which could also indicate that we are in a recessionary period. And that does not mean great things for what we see for the stock market. Average hourly earnings also missing consensus. And then year over year also down a little bit. And so these aren't great. I'll be honest with you. Definitely not great for us. The market reacted, and most likely this is going to set us up for some red in the coming days. So, and probably even the coming weeks here. So we were talking about August, September, sometime before the election, watching for some sort of sell-off to happen. This, in my opinion, is that catalyst event that we've been looking for, that we've been watching for, and hopefully been set up and prepared for. I have some short hedges out there. So if you've been following my buys and sells over at the Discord available through the Patreon, that link down in the description, go ahead and check that out so you guys can receive my technicals as I go and update them. I'm going to put the charts up here for you. So here we're looking at SPY, and I have just the near-term Fibonacci retracement. We actually just dropped below the 38.2. The 50% Fibonacci retracement on this is at 529. We got rejected off the 20-day. You can see that I have this up here for you. Trading that sell yesterday, honestly, it always feels like somebody knows something, right? Amazon earnings coming out. I picked through them. I have them highlighted and annotated, and that's for a different video. But I will tell you that there's a shift in consumers with what it is that they're looking for lower average selling prices on the items that they go out to find. So people are looking for better deals, and it seemed as though in the earnings report that people were stocking up this past quarter for what could be coming ahead. So that is something to pay attention to from those calls. And then with the unemployment rate that we have, this doesn't spell anything nice. It doesn't necessarily sit all that well. If you guys want to see what it looked like by the minute, let me put this on here for you. We'll reset the view so you can see it. Right there, you can see that big drop that we got with volume to accompany it just right at the 8:30 hour for SPY. We will move over to the Qs. Where could this thing go? Well, we are already down here at the 61.8 Fibonacci on the near-term retracement. So if we back that up to the next time to see what that looks like, the 50% Fib is down here closer to that 200. So we want to be watchful for the 200-day on the Qs. When we look at SPY, if we go back out to the daily chart on that one, there we go. The 200-day on this is way down there at about 500. So that would be quite an unwinding to see that happen. Now, mind you, we're still up above the 50-day. And the 50% Fib line, and we're also up above the 61.8, which is all the way down at 520. So you can even see some historic resistance coming along with those Fibonacci retracement levels. If we do push down below those, that 200-day is most likely set up for us, along with some historic support that's also down in there. So we have history for us. We have moving averages for us. IWM is probably going to suffer on this one at 208 in the pre-market. Near term right now, we're sitting on the top of historic support, and we'll see where that goes for us. If this is signaling a recession, most likely the small caps are going to suffer from it. And I said before with this run up that this is most likely not the time that it takes us back to all-time highs. And you can see we peaked at 228. Got rejected significantly off of that and then sold down the last 2 days. So today, most likely also a down day, most likely not at the bottom yet, especially with a 4.3% unemployment rate. As it's been mentioned before on my channel, many other channels, it's also been mentioned by many economists that are out there. Unemployment rate doesn't usually move in a linear fashion that you would get 0.1% each time, that it is something that can move exponentially instead, where you have more of an upward curve to it where it accelerates rather than just move steadily along. So the 4.3% today, not necessarily all that great for us to see that take place. And you can see that and through the three indices that I have in here, SPY, QQQ, and IWM, most likely taking out a few more short positions today. And I'm glad that I had some of those short hedges leading into this. And so let's move on to some of the other things that I track here. Bitcoin. How did Bitcoin take this thing? Well, Bitcoin, why isn't it moving more than what we had before. So let's put this up here. Look at the minute chart on Bitcoin. Bitcoin also selling down. Now, mind you, it is a risk asset, but there's also people who think about it as a flight to safety asset that's out there as well. So you're going to have a little bit of that warring there. Most likely, we're going to have a downward trajectory to Bitcoin as well if the markets also sell down and go further into risk-off territory. And while I'm on to that TMF, you'll notice TMF did extremely well on this. I actually closed out a position that I had yesterday that was up significantly. Had I held on to it today, it would have 2x'd even from yesterday's prices. So it was nice. Caught that upside on it. I'd have to go and look at the percentage for you. I think it was 45% up, and then I would have been up even more. It was a $50 call option that I have with the volatility spike that we have and the appreciation today. That would have been at least 800 just in intrinsic value alone from the price as I record this right now. So Tesla, if we hit recession, what does it mean for Tesla? Well, not great for the automotive industry in general. And you can see Tesla is taking on that negative impact right now at 210 in the pre-market hours. We have 200-day support just under 205. It's actually down at 204. The 50 days up there. Most likely, we're going to see a further sell on this. I'm guessing that that if recession is in the cards for this, that it is going to be something that pushes us down through that 200-day. Now, mind you, with all this talk and all this doom and gloom, I do want to caution you that being overly bearish, especially in short-term things, especially if you do like short-term options, for example. Sometimes after big rips down, then we can see those bounces happening for us and they can kind of mess up that timing. But I do think that this is that trigger moment that we get that's going to really set us up for what happens through August, September, possibly even into October as we lead up to the election. Wherever we find ourselves at that point in time, if it is an extremely low point following the election, we might actually start to really see some significant upside and actually have a nice little rally for us into the close. And with what I've had in my last videos on a video, mind you, yesterday was a traveling day for me. I wasn't able to get any videos out. Had a wonderful time with Stockmo talking with him. But like I said, that travel day that I had yesterday and getting home and getting reset and everything like that, man, the market picked quite a day to reposition itself leading up to today. And I'm glad that I was able to take advantage of what I was and be able to communicate those sells with those profits over to my group. And then I'll tell you what, today I'm at least glad that I'm here for today to take advantage of this. Nvidia, I said potentially rising back up to that 150 level by earnings. But one of the caveats that goes along with that is market sell. And right now the floor is being cut out from underneath its feet on this one. So for that run up to 150, it's probably pretty doubtful at this point in time that we're going to see such a massive run up for Nvidia. As a matter of fact, we might even come in low to earnings. We're going to have to watch and see if this is a sustained sell like I think it will be for the broader market in general. I think it's going to compress the multiples that we see stocks trading at, and that includes Nvidia. So this is one where the tide is lowering. So that ship, that big, huge, massive cargo ship that is Nvidia is also just going to lower right along with it. It's going to trade at a lower multiple, but that is usually when you find those incredible trading opportunities. Where are we at right now? We're at about 102 in the pre-market. We have a gap to fill down to 95. The 200-day is all the way down here at close to $80 per share. If we are able to get down to that 200-day, I think that would be an area where you'd find significant upside, even back up into the three figures, as I still believe that Nvidia is a three-figure stock. So if we go down to $80 per share, for instance, that's still a 25% upside to get back up to that $100 per share. So for Nvidia, I'm not bearish on Nvidia. I do think that it will trade lower in the near term for us. We need to look for that support where that happens to be. I think we're going to fill this gap down to 95 at the very least on this one. And we'll have to see if that's where the floor comes in or if it's going to push down that next big line that we have, even by history and by moving averages, is all the way down to $80 per share. So be on the lookout for that. Intel did no favors. Amazon also in their earnings call said that they're working on more with their own proprietary pieces, that they're looking to save a little bit on what they would be spending on Nvidia parts. Now, mind you, big tech are some of the major contributors to what we have for Nvidia, but just as Elon said, you can't get your hands on the Nvidia parts, so you do have to look for alternatives in there as well. So that means that the demand is still robust and strong for Nvidia and for the foreseeable future. And then what we have to look for next for Nvidia is, do they have to get into a bigger competition that's going to compress their margins that they have? Because if that's the case, then it could change that trajectory that it's on. So we are significantly down below all-time highs of 140. We're down below that 125. I still think that over the next 12 months that you could still see that rise back up to 125 to 150. I still think that range is still within reason. We're going to have to see how the market treats us today and in the next coming weeks, most likely, to find out, because I don't think that the bottom's in yet, especially with the unemployment rate that we have. We'll see what sort of story gets told from that. So let me bring this down so I can talk to you guys directly about this stuff. So I'm going to be making some plays today, adjusting my portfolios and everything. If you want to see what I'm buying, you can do that by using that link down in the description for the Patreon. If you guys don't want to wait for my technical analysis and want to learn how to do technical analysis for yourself, including trading using the highly successful bread recipe that has been developed by Stockmo, there's a link for a technical analysis trading course down in the description. And by the way, he's hooked me up with a coupon code for that. Massive savings by using Doctor, DOCTOR. It's in the description if you go and check that out as well. That'll save you a ton on that course, and that can actually really, really help you guide your way through the market through technical analysis trading. And it's a very easy to follow strategy as well. And that is what I think is not only beautiful because of the success rate of it, but it's one of those anybody can do it methods if they even have some half decent, just even the free charting software out there with your trading platform, to be honest. So thank you guys very much for watching. Check out the links down in the description, and good luck out there. Careful not to panic, breathe, make any rational decisions. Nothing in here is financial advice, but these are all my thoughts and my commentary. Like I said, you're welcome to join me and my community members over in the Discord. We'd love to hear from you, especially if you're looking for support during these next few weeks to months coming up here, that you would like to have better help at navigating the markets. We're here for you. Thanks, guys, for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.